Now let's do some exercises to test our knowledge. Now the first exercise here is to answer the following questions. So what are the questions? Let's see quickly. See, the first question which has been given to us is, do public deposits create any charge on assets of a company? Now what is the privilege which is given to GDR holder? Okay, what are the factors which determine the amount of working capital? And you have to name two financial institutions from the one which we discussed. So let's see what are the answers. See, do public deposits create any charge on the company? I discussed with you, no they don't. Okay, now what is the privilege of the GDR holder? He can convert anytime the number of shares that it represents. Okay, what are the factors which determine the amount of working capital? See, there are 5 factors: length of the operating cycle, then what is the credit policy, what is the nature of business, level of sales and inventory policy, which we discussed earlier. Now what are the two financial institutions? This would be your IDBI and IFCI. Let's do exercise number 2. Now you have to again answer the following questions. Okay, so let's see what are the questions. What is the one advantage of trade credit? So we understood the merits, we understood the demerits. Now the question here to be answered is one merit of trade credit. The second is, what should you keep in mind when you are taking a loan? Now remember, you have to answer this from a perspective of a company. What are the advantages of GDR? So you have to give 2 points explaining the advantages of GDR. Now you have to give an example of short-term finance, medium-term finance and long-term finance. So let's see what are the answers. See, the one advantage of trade credit is convenient and continuous source of finance. It is a convenient source of finance because you can go and against the bill you will get the credit. Whenever you are buying the goods from the supplier, he will give you the credit, and it is a continuous source of finance which we discussed earlier. Now what should you keep in mind when you are taking a loan? The interest rate, the most important thing, and if the loan is not paid, then mortgage asset would be sold off. What are the two advantages of GDR? See, you can raise finance from global market and you have control of the company, that is, the control of the company is not diluted. Next, example of short term finance would be purchase of raw material. When I have to purchase raw material, I would require short term finance. For medium term, if I am renovating my office, then I would require medium term financing. Long term, any purchase of building would be an example of long term financing. Now let's move further. Now this is exercise number 3. You have to state whether it's a true or a false statement. So what are the questions or what are the statements given to us? Let's see that. Equity shareholders are executives of the company. True or false? Then business finance is required for growth and expansion. Sun TV, this is the third statement given to us, that Sun TV has issued 1 lakh shares of face value 1. So share capital is 1 lakh. True or false? Then borrowed funds are provided by owners of the capital. Okay, let's see what are the answers. See, equity shareholders are not the executives of the company, they are the owners of the company. Now business finance is required for growth and expansion. This is one of the reasons why you require business finance. So this is a true statement. Now when you are defining the share capital, remember the number of shares which are issued, they have to be multiplied with the face value. So here the face value is 1 and hence the share capital is 1 lakh. In case if the share issued were 1 lakh and the face value was 10, then the share capital would have been 10 lakhs. Okay. What are borrowed funds are provided by owners of capital? No, because they are provided by borrowers. Okay. Now let's move further. So what are we supposed to do? We have to distinguish between internal sources and external sources of finance. See, first understand the basis, that is on what basis we are going to distinguish. The first one is on the basis of meaning. See, internal sources are generated within the business External sources are those that lie outside the business. Lenders, investors are example. Now the next is giving an example. Here collection of receivables, and for external sources borrowing from commercial banks would be the example. Purpose. Now they solve limited needs of business. So the problem they solve would be limited. There we get large amount of money. So lot of problems or lot of needs can be solved. The cost is very low in internal sources of finance, but then it is very high in external source of finance. The security is required? No, it is not required in internal sources, but in external sources, if you are going for a bank loan, then the mortgage assets would have to be done.